Ladies and gentlemen, welcome to the 2021 FIS Fintech Accelerator Demo Day. And now, broadcasting live from Little Rock, Arkansas, is Wayne Miller, Executive Director of the Venture Center.
Welcome to the FIS Accelerator Demo Day. Thanks to the hundreds of participants and innovators joining us from around the world, and we have a small audience here with us today in Little Rock. We are excited and privileged to present to you the 2021 cohort of 10 fintech companies that are changing the way the world banks. And as always, we want to recognize the courage and the tenacity of these remarkable teams and their founders as they traverse the challenges of the ever-changing fintech landscape. To all of you, job well done. You know, the Venture Center has been on a remarkable journey. This cohort represents the 6th iteration of this program and our partnership with the largest fintech in the world, FIS. And FIS has been recognized recently as one of the most innovative companies in the world and also to work for. And we have had the honor of being part of that innovation fabric over these past 6 years. So it begs the question, where were we 6 years ago, right? So, I leaned on McKinsey and Deloitte to provide a little color. So to start with, Miss Piggy and Kermit announced the end of their relationship on Twitter. The star of The Apprentice announced his campaign for president that same day on Twitter. Adele released her single, Hello, which hit the top of the charts that same week. The stock market was at 20,000. Brexit happened, right? It was the worst IPO market in history. And gallon of gas was $1.87. Microsoft paid $26.2 billion for a company called LinkedIn, which I think would be a bargain at today's valuations. And Venmo reached $1 billion in transaction volume. Apple released the iPhone 7 without a headphone jack, and that created quite a stir. And we learned about a new technology called blockchain that was going to change everything. Cryptocurrency was being touted as the next mainstream form of currency and also FX. And mobile payments were going to completely displace real wallets to the point where somebody said smartphones will dominate all transactions and the world will be run by a bunch of computer engineers. Funding for most fintechs was going to dry up, and that those would be assimilated or acquired by big banks. Branches were to become obsolete, and banks would join in partnerships with coffee shops and gas stations. Wearables and IT devices were going to drive to all the interactions that we had, and it was supposedly going to be the end of car ownership as we knew it by the end of 2020. Well, as we all know, it didn't quite work out that way. Of the top 10 fintechs to watch in 2015, only 2 survived, Stripe and Plaid. For 14.2 million US citizens, today digital banking is their only form of money management. And that's kind of a remarkable statistic, considering that 6% of the adult population and only a few digital banks existed 6 years ago. Today, 34% of banks have fully digital processes, and also today, artificial intelligence and machine learning, they're targeting tools for various areas in fintech, aiding in fraud detection, process optimization, credit scoring, and certainly customer service. We are seeing growing normalization of these technologies industry-wide. Digital lending, peer-to-peer platforms, and alternative resources for loans continue to grow, along with the advent of what we call BNPL, or Buy Now, Pay Later solutions. The pandemic certainly had an impact on contactless payments with an increase of 41%. The UK hit 90% of their transactions occurred in this fashion. In 2015, VC-backed investment in fintechs was about $19 billion. In 2019, that was $168 billion. And we are currently on pace to beat that in 2021. Blockchain and RegTech are now the fastest growing segments, yet 56% of people surveyed said they're still a little unclear about their application. Today, there are 20,000 fintechs across the globe, 9,000 of those in the America, and 3 out of 4 people worldwide have used a tech or a fintech service. COVID has spurred incredible adoption with a 73% increase in digital financial technologies. But most importantly, banks have embraced the opportunity to collaborate with fintechs, and the results have been genuinely meaningful. Having now completed this effort for the 6th year, we can reflect on that last comment, and probably the most important to the Venture Center, because we have worked diligently in our role with FIS, the state of Arkansas, and the banking industry to create an environment where fintechs and industry leaders in the financial industry can come together and solve problems that matter. This has been an honor and a privilege, and we look forward to continuing this journey. You know, like most good husbands and guys, I had to look up what the appropriate gift was for the 6th anniversary. So I knew what to buy for Gary and Rob, of course. And what I learned to my delight is that it was iron. And it seems only fitting, as iron represents the durability of a partnership, and nothing could be more appropriate as to the durability of our partnership with FIS as it continues to be strong. Now, it's my pleasure to introduce FIS's executive in residence, Collins Andrews, who has been a force in forging this great relationship with FIS. Collins?
Thanks, Wayne. As Wayne said, I'm what's called the executive in residence for FIS, but I'm embedded with the Venture Center team. And I've had the privilege of this role for all 6 of the FIS accelerators. So I was a retired systematics and all-tail information services exec, and I got to come out of retirement to represent FIS with these accelerators. And as you may know, the origin of FIS is with systematics here in Little Rock. So for me, this work has been like coming home, and I have absolutely loved it. And I thank FIS and I thank the Venture Center for allowing me to do this. When FIS considered participating in this accelerator, and that was late 2015, the deal was put together by Chris Klein, who's an FIS exec and a Venture Center board member, along with the CEO of FIS, Gary Norcross. And Gary assigned the FIS leadership for the accelerator to Rob Lee. And Rob was a perfect choice because he's a senior exec, and he had a background with all-tail information services like I did, but he had also been a successful fintech entrepreneur. And that's a rare combination of background and skill, and it just worked. So since then, with Rob being a major player, FIS has grown on an average of, and this is remarkable, 18% a year, to where it's now, for the 12 months ending in June, it's now over $13 billion in revenue. And that's just unbelievable growth. Over the past 6 years, Rob has continued to advance in FIS. He's been the chief product officer. He's been the head of digital and banking, and he's now in a new position, president of FIS Impact Ventures. That's a serious growth effort by FIS, which embraces the future of financial services and entrepreneurship together. He's a friend of the Venture Center, been here to Little Rock many times, and he's certainly a good friend of mine. So please welcome the president of FIS Impact Ventures and a true expert on the future of financial services, Rob Lee.
Thank you, Collins. It's great to be here. I wish I could be there in person. We all know how difficult it is to travel these days, but Gary misses being there. I miss being there, certainly in person as well. So, but it's just a great honor to recognize this year's group of talented innovators. You might be able to see, it's probably a little blurry over my left shoulder, but that's actually the card from the first year, 2016, of innovators that we brought in, and fondly recall all the times that I've been to Little Rock and Venture Center. And while we have grown in the time that since we founded and helped launch the accelerator, we've grown significantly. I think it's been just a pleasure to watch Wayne and Collins and the entire team grow the accelerator to what it is today, and look forward to continuing that. You know, connecting virtually no way dampens our enthusiasm for the day. As Colin said, 6 years ago, we started the program with the Venture Center in the great state of Arkansas. We fully recognize the power and potential of early stage innovation. You know, that's my job today. Actually just settling into this job. I've run for the past few years our global core and channels business. And it's really exciting to get back into early stage startups, working with innovators, and I'll be intimately involved in the accelerator going forward. You know, mentoring cohorts that run this program is a key element of our overall strategy, and certainly central and core to what I'm doing in the FIS Impact Ventures group. You know, disruptive innovation is in our DNA. It is one of the things that really drives us, from Bruce Lothers, our president, to Gary Norcross, our CEO and chairman, are constantly asking about how we innovate, how we create new innovation, how we move faster. But I'd like to also say that just a few weeks ago, we were named one of the best places to work for innovators by Fast Company. So not only do we help foster a culture of innovation around FIS with programs like this, but also working within FIS, we're very proud of the fact that we were recognized as people within the company also innovating, and Fast Company is a great award. This distinction was mostly due to the fact that many of the world's most disruptive companies rely on FIS for their innovations, things like Code Connect that help really support and facilitate that ecosystem of disruptors. If we look at, people used to say that Walmart would never offer loyalty as a currency. I think we all know Walmart is Arkansas's largest employer. I guess I should say US's largest employer, one of the largest employers in the world, maybe the largest. But loyalty as a currency is something that we offer. It's very innovative, and their Walmart customers are already loyal. But now all of a sudden, we're offering with Walmart our loyalty redemption at the point of sale and through e-commerce. That's just an example of how the breadth and platform that we deliver with a large company like Walmart inside a large company like FIS can make that innovation really come to life for consumers. So the recognition for Fast Company is new. Our role as an innovator, as Colin said, has been long, and we originated, our roots run deep in Arkansas, and just love the program. We can't do everything ourselves, clearly. That's why we believe that the FinTech Accelerator program is so important. We've had a lot of great companies come out of the program. We are actively working with many. We want to better understand what's next. That's a very important part of the program, is to see the trends that are emerging. You as innovators are out there every day working with customers, working with disruptors, and it's important for us to be exposed to that and see how your disruptions will really impact FinTech and the way we all live, work, and play over the next 5, 10, and 20 years. Today, we'll hear from 10 FinTech companies that are focused on redefining things like credit monitoring, authentication, banking as a service, automation, and financial wellness, to name a few. As a matter of fact, one of those companies, Long Game, is already teaming up with FIS in the FDIC's Tech Sprint program. Really cool program. We hope we win, knock on wood. But we're both focused, both Long Game and FIS are focused on breaking down the barriers, and something I'm very passionate about, breaking down the barriers to those that are underbanked or unbanked. So overall, we've had more than 60 FinTech companies come through the program. Proud to have met them all. And before we get to know the latest and how they're going to change the commerce as we know it, I'd like to thank the Venture Center and specifically Executive Director Wayne Miller. Thank you for that opening. Also like to thank Arkansas Governor Asa Hutchinson. Again, Collins, love to be there with you in person and reminisce, but thank you very much for being the facilitator for this program and really being the glue between the program and FIS. I'd also like to thank all the many FIS leaders and volunteers who make this program so successful. We have many people within FIS that are just passionate about the program. Would love to get back to Arkansas, but have done it virtually as well. I get emails and texts and calls from people that are within FIS that are really excited about the program and excited specifically about the companies that we're launching this year through the program. So thank you. Thank all the innovators and participants of the program. Without all of you in attendance today, we wouldn't have been able to continuously improve, innovate, and change how the world banks, pays, and invests. So thank you, Wayne. Thank you, Collins. And thank you all of the innovators and participants of the program. Appreciate it.
Thank you, Rob. We so appreciate having you back involved, your leadership and your commitment to innovation. We're excited to see what the future brings. This program would not be possible without you and the support of so many people and the leadership of FIS, but it also would not be possible without Arkansas's governor, the Honorable Asa Hutchinson. Governor Hutchinson has made a dedicated effort to drive the tech sector forward in Arkansas. In his support of the FIS Fintech Accelerator has enabled banking and fintech partnerships to grow, not only thrive in Arkansas, but throughout the world. Thank you, Governor Hutchinson, for your steadfast support and being a champion of innovation. Additionally, Congressman French Hill has been a stalwart supporter of entrepreneurship and fintech innovation. He has cheered us on from the halls of the House of Representatives and often alongside us here in past demo days. Both Governor Hutchinson and Representative Hill could not be here with us in person today, but they sent some video messages. Let's take a listen.
Hi, this is Asa Hutchinson, governor of the state that I love to remind everyone is the birthplace of FinTech. Thank you, Wayne Miller, Gary Norcross, and your team at FIS. And thank you to the entire 2021 FIS Fintech Accelerator cohort. This is the 6th year in a row that Arkansas has hosted this globally recognized, award-winning FinTech program. 60 graduates have gone on to great success around the world, but they know they always will have a home in Arkansas. This program is a jewel in Arkansas's crown. The impact of what happens here echoes around the globe. Congratulations to each of you, and we'll see everyone next year while we eagerly wait for the life-changing innovations of 2022.
This is Congressman French Hill. Congratulations to this cohort for the FinTech Accelerator program at Little Rock's Venture Center. Congratulations too to Gary Norcross, CEO at FIS, and Wayne Miller and his outstanding team for leading the charge for the past 5 years. You're joining the 6th cohort, and I know you'll just be just as successful as the previous 5 in pioneering the way for banking to expand into FinTech around the world. We're grateful to have you in Little Rock. You're always welcome in Arkansas, and my hearty congratulations for the competitive work you've done that's led to your selection for 2021. Good luck.
Good deal. Well, thanks, Governor Hutchinson and Representative Hill. We have the pleasure of having the Secretary of Commerce of the state of Arkansas, Mike Preston, our great friend, with us today, who has been an amazing supporter of our program and what we do. In addition, I've asked Daniel Schutte, our Managing Director of the Accelerator Programs, to join us on stage here today, along with Secretary Preston. Secretary Preston, you've been involved in this program for quite some time. More importantly, we appreciate the efforts that you make for Arkansans and trying to continue to grow the tech sector within our state and so forth. You know, if I'm an early stage tech company, why Arkansas?
You know, why Arkansas? It's a great question. I think the governor hit it from in his remarks. We're the birthplace of it. We've done it before. We've have a proven track record of success. You look at the companies in a Systematics, an Alltel, to an Axiom, or to, you know, as we talked about before with Walmart and the world's largest company right here. And, you know, it's a retail company, but it's really a technology company. And it grew from this, you know, this small state. And I think because we've proven ourselves and we have that track record, but yet we're still a small state, that the entire state will get behind a company. We can help them to grow, and then we're always going to be their champion.
Awesome. We've had a couple of companies that have made Arkansas their home, and you all have done an extraordinary job of supporting them with incredible incentives and so forth. So I know we're all eager to get past the COVID challenges that are upon us, but you know, it's also, there's so many great things about the outdoors, a great place for people who love that. A little bit about Arkansas as from that perspective as well.
So Arkansas, I mean, it's just a great state. I'm someone who's a transplant. I moved from somewhere else, and you know, I say I got here as quickly as I could, and I've put down roots, and we're growing a family here now, and it's fantastic. The state is unlike anywhere that you can really experience, because we have that quality of life. We still have that low cost of doing business, and the people here are just tremendous. But then we also have the business side of it, that we're competitive, that we can go in and we punch above our weight class in so many reasons, whether it be business or politics. Arkansas is always on the map, and it seems like we're always on the table. But then just the place to live. And I think that's something through this pandemic that we've learned, that we've seen, that, you know, you need to go where you're going to be happy. You don't always have to be in that office all the time. Remote work is kind of the new trend, and people are going in that direction. You can almost live anywhere in the world. So why would you do it somewhere in a place that you've just got a great quality of life, that you have the outdoors activities, that you can get anywhere in the world from, you know, just a flight or two, but then you can, you know, in a few minutes' time be hiking a mountain or floating down a river or just enjoying the outdoors. Anything you want to do, you can do it all right here in Arkansas, and you can do it for much cheaper than you can really anywhere else in the country.
And you can get things done in this state, which is so great because the people
That's
are
right.
terrific. Daniel, you've been busting your butt, man, for the last 14, 16 weeks. Also, having the chance to vet nearly 1,000 fintech companies to select these 10 that we are about to see today. And I know how hard you work, your friend. I'm so grateful to you and your team. Tell us, what are we going to see today? What can we expect to see?
Yeah, what you can expect to see today is 10 7-minute demos from the presenting companies. These are relevant, timely, tenured, bank-enabling financial technology companies. In all cases, they're live in market with financial services companies, financial institutions. You can also expect that these solutions are going to be different from those that the company started the program with. We hope that you'll see the impact of the 60 financial institutions, more or less banks and credit unions, that visited the program and met with each of these companies one-on-one for 30 minutes each. We hope that you'll also see the impact that the FIS personnel who are involved in this program that Rob Lee referenced earlier, the hundreds of FIS people, that's true, and they interact with these companies weekly. We hope that you'll see that when you see their presentations and how well they fit and understand your businesses. You can also expect that after Demo Day, us at the Venture Center and FIS are here to help you on your innovation journeys. There can be no greater demonstration of FIS's commitment to you than the fact that they, along with the state of Arkansas, sponsor this program for you, make it available for free for you to participate, in order to facilitate and sort of nurture financial technology, financial services companies within the market, let you know what's happening on the bleeding edge of technology, and ultimately benefit all of your clients and members through better services, software, and experiences. Everybody wins. Now, not every financial institution on the line, and by last count, there were actually 80 or 90, so good luck with that, FinTech's big day. You're not going to choose to prioritize meeting with each of these companies that present today, and that's totally fine. Every venture capital firm on the line is not going to find that each of these companies fit within their investment thesis, and that's totally fine. Every regulatory body on the line may not want to follow up with each of these companies. That's totally fine. We find that if you meet with 3 or 4 out of the 10, that's been a great day and a judicious use of your time, right? So what we're going to do during each of these presentations is put up a short, this is me doing a Zoom poll. There's going to be one of these on your monitor when the companies present. About 5 minutes into their 7-minute presentations, we're going to ask you a pretty simple question. Do you have interest in meeting with this company again, yes or no? If you click yes, then we're going to share that data back with the presenting companies, the founders, and they will reach out to you kind of to schedule some time to dive deeper into the product. If you select no, nothing happens, except the window leaves your monitor and you can see the rest of the presentation. My hope, not that anybody asked me, for today is that you begin to view or continue to view FIS and the Venture Center as trusted advisors for you on this journey. My hope is that you also understand, as Secretary Preston mentioned, that I'm also a transplant, and I understand Arkansas is a hell of a place to do business. We also hope that if you've never visited the FIS Fintech Accelerator and met with each of these companies through a VIP financial institution engagement, that you get on the calendar for next year. I promise you, if you have a bank email or credit union email in your domain, I'm going to reach out after this so we can get that going. This is an opportunity for you to invest in yourselves, your personnel, and your technology. If you're not investing there, then we have to question, what are you investing in? Finally, for the others on the line, those in the room, we hope that you get inspired by these founders and choose to go out and create something for yourselves. Last piece, we hope that through the efforts in some small way of the Venture Center at FIS and the state of Arkansas through this program, that you begin to view your business, your chosen profession, as more than just something you do, but rather a vehicle through which you can unleash your own creativity, create things that benefit ultimately everyone. That is really our teleological function at the Venture Center, right? To help entrepreneurs kind of grow their businesses. So if you want to do that, you reach out to us, we will be helpful for you. Now, you didn't ask, I gave you a long answer, sorry, Wayne. So we've broken the presenting 10 companies into 2 groups. It's a difficult break, but the first 5 are focused around the primary revenue generating activity of virtually every financial institution, lending. Now you'll hear from BankLabs, Vymo, Informed, Railz, and OakNorth.
And now, our first group of presenters from BankLabs, Vymo, Informed, Railz, and OakNorth. Our first presenter is Ron Dennis, Director of Client and Product Development of BankLabs.
Hi, my name is Ron Dennis, and I'm the Director of Client and Product Development for BankLabs Participate. I'm here to introduce you to BankLabs and our newest product, Participate, which is a participation loan automation tool. BankLabs is based here in Little Rock, and we also have an office in Dallas. Our parent company, Radius Group, was founded in 2010, and we created the BankLabs brand in January 2016 when we launched our construction loan management tool, Construct, and we now have over 150 bank clients across the US. Our founder and CEO, Mike Montgomery, has deep roots with FIS, as he was an early employee at Systematics and was a president at Altel Information Services, which was the forerunner to FIS. We started marketing and participated in September of last year, and in less than a year, we already have over 50 banks on the platform and over 200 in various stages of evaluation. Current client banks range in size from 100 million in assets to over 20 billion. There are banks with zero participations who see the tool as a way to keep key customers when they hit lending or concentration risk limits. And other banks with as few as 5 to well over 50 love the efficiency the tool creates when it comes to managing their portfolio. Participate is designed to automate the very tedious and manual participation process, both on the front end when selling a new participation and on the back end once those loans are closed. When selling a loan, Participate speeds time to market by making participations faster and easier to do. Just pick your partners, and a patented automated workflow handles the rest, including electronic NDAs, non-competes, and document exchanges. Once the loans are closed, Participate improves efficiency by putting both originators and participants on the same platform. You can share loan details, documents, and transaction history with your downstream partners, and Participate automatically sends email notifications whenever there's an update. As a result of the efficiencies and the improved time to market, Participate is being used not only for traditional participations, but also as a balance sheet management tool to sell existing credits. Let's take a look at a high-level demo, starting with selling a loan. Here I've loaded all the details about this particular loan into the Opportunity Details tab. I have my borrower and project info. I have a description. I also have some basic stats about the loan, including the type, the rate, amount, fees, guarantor info, key dates, and below I have some underwriting data. I've also loaded whatever documents my downstream participants would need in order to do their own underwriting, but my Manage Participants page is blank. I don't have any participants yet, but instead of having to pick up the phone, wait for people to call me back, send a bunch of emails, I'm going to click Publish Opportunity, and it's going to give me 3 options. First, if I want to send this out to all authorized users on the platform, I can do that. The second option is All My Connections. So we can enable you to build a network of trading partners, whether they're existing or new. And if you want to send it out to all those connections, you can. The third option is what we call clubs. And it can be a club of 1, if you only want to share it with 1 person, or it can be a club of many based on whatever XYZ criteria you want to come up with. In this case, let's say this is a construction loan. So I'm only going to share this information specifically with people that I know have an interest in buying construction loans. So as soon as I hit Save and Continue, out the information goes, but only those people that I've selected even have the opportunity to look at the deal or even have the knowledge that it exists. And so that's how I can share information of new deals with my downstream partners. If I want to buy a deal, I'm going to go to the marketplace. I have a couple options. First is I can follow deals if I come across something I like. I can also follow specific banks. These are the banks I would work with on a regular basis. Go all the way down, you see that marketplace, so if things are blasted out for everyone to see, this is where they'll show up. And then finally, I have my network. These are where deals are shared specifically with me because I was in a club, and I also got a notification letting me know there's a new opportunity to take a look at. Clicking in, the first thing you'll notice is from a downstream participant standpoint, I cannot see the borrower's name. That's hidden for obvious reasons, but I can see the description. I can see the basic stats. I can see the preliminary underwriting data. I can also see it's for North Dallas Bank or from North Dallas Bank, and they're looking for $15 million. So given I'm interested, the next step is to request that loan package. And in doing so, I have to agree to the terms and conditions, which includes both a non-compete and an NDA. Once I've done that, I can download the documents, do my underwriting, and decide if I want to participate in this particular loan. If I do, our automated workflow takes you through the rest of the process, again, really shortening the time frame in which it takes to do a traditional participation loan. Now, if I want to monitor everything going on across my bank, I can go to the participations page. From here, I can see all the deals I'm currently in the process of selling, as well as the deals I'm currently in the process of buying. I can see who I'm working with, the status, the type, the rate. If I need to upload or download documents, I can do that. If I want to communicate with my counterparty directly through the tool, I can do that as well. Below, I have my portfolio of loans I've sold along with the loans that I've bought. A couple things are important here. First is I can load my entire portfolio, bought or sold, existing or new. And we have a great custom reporting tool that makes it very easy to report on all your participation loans. Second, as an originator, all your downstream participants get access to the tool. So they have access to the deal info, the documents, the transaction history, and all the notifications that come along with that. So we're really helping improve the efficiency from day one. So in summary, we've taken what is traditionally a very manual process and digitized it. You can still use spreadsheets, emails, back and forth phone calls, drop boxes, FedEx packages, but our new digital platform, Participate, automates the process, not only from a desktop or laptop, but from any mobile device, and makes selling, buying, and managing participations faster and easier to do. That's why we're seeing Participate being used not only for traditional participations, but also as a balance sheet management tool to sell existing credits, do more deals, and increase fee income. Thank you for your time. That was a very high-level demo. Given the time constraints, there's a lot more I'd love to show you. If you're interested in seeing more, please send us an email at sales@banklabs.com. Thank you to those that are joining us today, and thank you to FIS and the Venture Center for hosting this fantastic program.
Our next presenter is Yamini Bhatt, CEO and co-founder of Vymo.
Hi, I'm Yamini. I'm a co-founder and CEO of Vymo. First of all, thank you, FIS and Venture Center, for creating this platform for us. Vymo is a sales acceleration platform. Vymo sits on top of CRMs or can work in isolation. It helps increase the productivity and effectiveness of your relationship managers. Vymo was founded by me and my co-founder Venkat. Prior to this, I used to work at McKinsey. Most of my work was on driving sales transformation at financial institutions. And what I learned very quickly was that CRMs were great systems of record to put all your customer data into, but relationship managers and salespeople were not using the CRM to either plan their activities or update them. And without visibility into what was happening on ground, it's tough to sometimes move the needle on things like lead conversion or cross-sell ratios or even customer CSAT scores. Around the same time, a very close friend, Venkat, was working with Google and Mountain View on user engagement, nudging individuals and getting them to discover more capabilities within Google's platform, right? What is today known as Google Assistant. We decided to bring both these concepts together and apply them to the world of sales transformation. Vymo does three things. Firstly, we automatically capture sales activities, something that no salesperson likes to spend their time doing. For example, calls, visits, meetings, anything on the calendar, virtual calls like Zoom, etc., or even face-to-face meetings using geointelligence, right? All of this is brought into Vymo without the need for any manual data entry. We then use this information and overlay it with performance to see what is it that the top sellers or relationship managers are doing with their customers in terms of engagement that the others are not doing. These are what we call winning behaviors, and these usually form the base of a sales playbook. Now, rather than giving the playbooks to managers and trying to drive transformation top-down, we translate these into nudges or next best actions using our platform and push them directly to the sellers. So just by acting on simple recommendations, sellers can improve their overall customer engagement, and also outcome metrics like meeting their revenue goals or CSAT scores or cross-sell ratios, etc. Today, we work with about 120,000 sellers across multiple financial institutions, banks, and insurers use Vymo. We've managed to increase lead conversion by 25%, cross-sell ratios, CSAT scores, etc., significantly within less than 6 weeks of deploying the solution. I'll quickly jump into a demo now so you can see get a sense of how this looks and feels. We're going to use the mobile interface since salespeople are on the move, but also the same capabilities are available on a web or an iPad, for example. I'm a loan officer. As you can see, I have a bunch of different kinds of goals. One of them is on activity, which I seem to be tracking okay on. I'm expected about 50 calls a month. I'm doing okay on that. However, I'm lagging a little behind on my revenue goals with net new customers. Today has been a good day. I started the day off with a couple of calls. I have 3 meetings, but the next one starts only at 12:30 p.m. I do have a few hours on my calendar. I'm going to use a small widget on my calendar to quickly check what else I could do as I head for my 12:30 meeting. Now, if this was a face-to-face visit, Vymo could also suggest who else within that vicinity could really benefit from an engagement at this point in time. And there could be various reasons this nudge could come in. It could be because a customer is coming up for renewal, or there's a product coming up for maturity, or it's a really critical account that we've not connected with for a while, right? So that's one way to plan my day, by seeing what else is in the vicinity. Another way would be just Vymo has a carousel of suggestions that we use to flag interventions required. And again, the interventions could be based on how critical this customer, member, or account is, and how overdue an engagement action is. I could also go through my list of accounts, cut in different ways by industry or by size or by criticality or their behaviors, right? And when I go into the list, Vymo helps me, gives me a very well prioritized view of which are the accounts that could benefit from immediate action, right? Now, when I go into one of these accounts, a lot of information is available at my fingertips on the go. And this information can help me engage the customer better. Now, let's assume I choose to make a call to my contact at Acme. When I place that call, and let's assume I've had a good conversation, this activity is automatically logged in, and my notes quickly from this meeting can be dictated into the system, right? So that's quickly captured. And similarly, we can also capture visits based on location intelligence, or we could capture virtual meetings and help initiate virtual meetings using Zoom, WebEx, Microsoft Teams, etc., depending on what they're comfortable using. Now, this helps me bring all the information into one place. What's important is not specific calls or meetings that an individual is doing, but being able to overlay this across the team and identifying what is it that top performers are doing. Now, let's step back and see what my manager can see. At any point in time, my manager has a ring view of everything that's happening: accounts that have been engaged, accounts that are overdue, actions that are overdue, average productivity of my team, what's working well for them, and so on, right? But what's really beautiful is that Vymo also gives insights into specific individuals on my team. For example, if you see here, John and Susan have been pretty productive. They've been doing almost twice as much activity as probably the third best, most active person on my team, Jane. However, John has more than twice as much conversion, almost 12 opportunities converted versus Susan for the same amount of effort. And if you can see the user insights below, the insight on Susan flags this clearly to me and suggests that I engage Susan or probably join sales calls jointly to figure out what could be done to improve her effectiveness, right? And make her as strong on outcomes as John is. So quick summary, this is the end of the demo. Quick summary, Vymo helps your relationship managers with 3 things: automatically capturing all activity that is happening, using that to learn what the top performers are doing and behaviors that could be mimicked by others, and then nudging them through next best actions on our platform to act on these. Thank you so much for the time. If you would love to know more, we are at yamini@getvymo.com, and we would love to hear from you.
And now we'll hear from Justin Wickett, CEO and co-founder of Informed.
Hi there, I'm Justin Wickett, co-founder and CEO of Informed. Informed automates consumer loan verifications for lenders using artificial intelligence. Our software as a service is used by the nation's largest financial institutions, including Ally Bank, Westlake Financial, and numerous others, to fund faster, more accurately. Each month, we automate the verification of over 100,000 applicants, turning documents and data into decisions in the matter of seconds, in accordance with each financial institution's policies and procedures. We have accuracy of over 99%, and we routinely backtest our AI against the 25 million records that we have in our contributory database to ensure that we're conforming with the SLAs that we're promising to our banks. Today, we've got a demonstration prepared for you guys showcasing how the Informed AI can be used to automate the back office of a traditional indirect auto lender. Let's have a look. All right, on the screen here is the Informed graphical interface, and it showcases a credit application that came into a financial institution that's harnessing the Informed AI. Don't worry, there's no person identifiable information revealed on the screen here. These are dummy documents just for the purpose of this demo. As you can see, the applicant applied for credit and has represented that they're a crew member working at Envoy Air, that they make $74,500 a year, that they've got a co-applicant named Lucinda Benadio. And before this lender can actually onboard this deal, they're gonna have to complete some verifications associated with income, residence, identity, insurance, promissory notes and retail installment sales contracts, appraisal guides, book out sheets, odometer statements, and title documents. It's a ton of work. And if you've ever funded an indirect auto loan, you know for sure. Today, we're not gonna fund an indirect auto loan because it's a brutal process to go through a 50-page PDF like the one that I just flashed up on the screen, keying in all of this information. Instead, we're going to allow the AI to automate this work on our behalf. We're going to drag and drop a PDF into the graphical interface that I showcased and allow the AI to go through page by page, identifying the different documents present, extracting the pertinent information, and using the machine learning models to compare the information against what was stated in the credit application and the 25 million records in that contributory database. We went ahead and submitted that huge 50-page PDF, and we're allowing the AI to now analyze all the documents from within. Most of our lenders just do this via API. They're pushing from their loan origination system to the Informed AI through the application protocol interfaces. We'll walk through now how a staff member at your bank, if they had to do this work manually, what they would be doing to showcase what the AI is doing in the matter of seconds for us. First off, your staff at the financial institution would have to look over the truth in lending disclosures. They would have to review the itemization of amount financed. They would have to figure out, were there any other ancillary products financed alongside the main collateral? In this case, there was a service contract from AUL Corporation in the amount of $3,500. There was a debt cancellation agreement in the amount of $500. This is a lot of work. And frankly, it takes your staff at the financial institution away from doing what they do best: deepening relationships with your dealer networks, with your mortgage brokers, serving borrowers and applicants. And instead, staff have to spend time going through this monotonous, repetitious process of verifying signatures, confirming that contracts indeed are assigned to your financial institution with or without recourse, and verifying that appraisal guides match up with, say, the collateral that was being financed, and that the right state disclosures like buyer's orders or purchase orders are indeed present in the loan jackets that your business is considering buying up. It's very costly when mistakes are made, and very often there are defects that are identified in this process that slow down and hamper operations. So we created the AI to save your staff the time. If these documents don't look familiar to you, that's great. We frankly don't want them to look familiar to you, because our goal is to have the AI automate the verifications, not just of the indirect auto loan documents, but also in the context of other verifications around, is this applicant really who they say they are? Is their income really along the lines of what they stated? Whether you're providing to the Informed AI open banking data or data from Plaid or Finicity, asking Informed to automate the analysis of that information, or whether your applicants are giving to you pay stubs, Social Security income award letters, military leave and earnings statements, Informed is turning documents and data into decisions per your policies, handling complex entity comparisons in the event where, say, the applicant represented they work for Envoy Air, but the pay stub shows that they was issued by American Airlines. The AI is tapping into knowledge graph engines to ascertain what is the relationship. And if you were to do Google searches, you would realize that Envoy Air is actually a subsidiary of American Airlines. Likewise, the AI is tapping into the contributory database of over 25 million records to ascertain, are the overtime earnings on this pay stub, are the bonuses on this pay stub in line with other crew members working in the airlines industry that reside in Fresno, California. So we're really harnessing the knowledge graph engines, the AI, we're enabling for a solution that's much more than just optical character recognition or OCR to bring greater accuracy and fraud detection. Reading off individual line item deposits from the bank statement so that you can schedule auto pay in accordance with when your applicants and borrowers are actually having deposits into their accounts. The AI automates these verifications in a matter of seconds, comparing, say, documents like this pay stub to known fraudulent examples out there on the dark web. If we were to Google for fake pay stub generators, we could see how many different examples exist out there on the internet. There's no way that the staff at the bank has the time or frankly wants to stay abreast of all of these known falsified examples when they can be calling on mortgage brokers, calling on dealers, deepening relationships, adding the human touch, and allow the AI to, and the computers to memorize all of these known falsified templates out there or that other lenders have flagged and fed into the contributory database. When the AI is finished analyzing that huge 50-page PDF, the application is updated, and you get to see how the AI has gone about automating the verification of odometer statements, for example, or ancillary product contracts like debt cancellation agreements, gap contracts, service contracts were financed as ancillary products in addition to the main collateral, as well as obviously identity, income, and residence, how the AI is extracting information off of each one of these documents, calculating the applicant's income in real time per your policies, comparing it to what the applicant stated on his or her credit application. We're incredibly excited to show you more and learn more about how you're envisioning using AI as part of your consumer loan funding operations. And we want to especially thank FIS than the FinTech Accelerator for including us in this year's cohort. Please reach out. We'd love to partner. Thank you very much.
And now we'll hear from Soeb Zahid, CEO and co-founder of Railz.
Good afternoon. My name is Sohaib, and I'm the co-founder CEO at Railz. We are a single API to help financial institutions get access to financial data on their businesses across the board. We are a Series A company. We recently raised a 12 million new capital within 6 months of raising our seed stage. We have amazing investors all the way from New York to Silicon Valley, and we're very excited to work with them. Currently, we give access to a little over 90% of coverage to the accounting software systems in the industry, all the way from FreshBooks to mid-market systems like NetSuite and Sage. Now, the reason why we give access to accounting systems because we believe it is a single source of truth for your commerce, payroll, banking, and tax data. And we can actually give a more breadth and depth into how business is doing from the financial health perspective. Now, when you pull business data out of these accounting systems, each business is unique. That means if there are 30 million businesses, there are 30 million different data sets out there. That makes a big data problem because these accounting systems are highly customizable. What Railz does is we create a universal chart of account. It's agnostic to business, it's agnostic to accounting systems. What we do is if a bookkeeper or accountant generalizes an entry, for example, accumulated depreciation only under fixed asset, we take that and we actually make it more granular. We know that accumulated depreciation is part of fixed asset. It's a non-current asset, and it's an asset belonging back in the balance sheet. So we normalize the data across the board, regardless of which accounting system it's coming from or which business it's coming from. So you see a universal schema across the board to work with that data, which makes your data science teams really, really happy. And you can take that product online really fast the same day. That makes the data uniform. You have a common data model to take the data out of. It's timely. You don't have to do any pre-processing. It's a complete data set. We enrich it. We make sure heredity of the data and originality is intact. And we pull data all the way back to the inception date of the business and do a 24-hour sync, making sure that accuracy of data is there. Now, once we build a very robust base of this data, we are able to offer you insights and analytics on the businesses, income statement, cash flow forecasting, different financial ratios, their credit scoring, so you can actually understand the businesses much better. These are all the ratios which are available today to take advantage of Railz insights and analytics, all the way from credit ratios, liquidity ratios, to different profitability ratios that you can pull on these businesses and make decisions on. All right. We're also introducing Railz accounting score, as well as a new credit rating. Now, it just simplifies your whole process from loan origination. You don't have to your customers to go back to the bookkeepers to submit financial statements. You have direct line of sight to them. You don't have to do any follow-up emails to them to submit those statements. When they submit the application, you have the data right away as soon as they click the submit button. Our use cases are in insurance. Coterie is using us for application process, underwriting, renewals. Rumbleshape is using us for the same purposes. M&T Bank is actually using us to give insights back to their customers. And these are other use cases that are being built on top of us. Now with that, I'll show you a quick demo of how Rails work across the board. So this is a mock website where you can deploy Rails. Rails widget is completely white label and adaptable in terms of how you want to deploy it and what work process you want to deploy. Your customer essentially comes to this, selects their accounting software provider that they want to connect with. It takes them to the authentication page of that provider. And once that happens, all they do is put in their username and password. Rails will start to connect to that system and start to pull out data on behalf of the bank. Now, that data will actually come up right here. So this is the report that's coming out of QuickBooks. And you'll see that we give you access to credit notes, bills, vendors, different financial ratios, all the way to transactions and trial balances. Let me just pull a balance sheet and show you what that looks like. And in a business, let's pull a zero business here. Go back into the sandbox environment quickly. Let's pull the report. So this is the business information that you're able to pull on your business or on a business that you're able to pull. And regardless of where it's coming from, you will actually see the same format across the board. We also allow you to actually upload this into your core as PDF, JSON, XLS, or CSV. So it's a very easy way to deploy data from your SMEs into your core and pull data on your small and medium businesses. Lastly, I want to leave you with this. Rails is an API for you to connect into accounting systems of your businesses. We normalize this data set so data science teams don't have to work on it. You can go live with us today. And lastly, once we normalize this data on a very solid foundation, we're able to analyze and give you insights on that business. So your underwriting teams can actually have access to more better data points to augment their models. Thank you very much. And it was great presenting to you.
And now we'll hear from Hugh Shannon, Account Director of OakNorth.
Hi, everyone. Thanks for having us today. So Hugh Shannon from OakNorth. And what we're all about at OakNorth is credit intelligence for commercial lending. And key to what we do to deliver that credit intelligence is giving you an automated, forward-looking view of commercial credit risk. Now, what that enables is for you to lend smarter, lend faster, and lend more in the commercial space. So by lending smarter, you're able to identify risks earlier. Lending faster through adding automation and time savings in the annual review process, for example. And lending more by identifying opportunities for profitable growth. Now at OakNorth, we deliver, as I said, credit intelligence for commercial lending. We focus with bank partners in the US on C&I and CRE lending. And our sweet spot as we partner with banks is analyzing loan exposures between $1 and $40 million. So these are commercial credits that lend themselves to fundamental credit analysis and not a scored or auto adjudication model. We work in conjunction with banks' existing tech stacks, so with their LOS, spread risk programs, etc. And really we act as an analytical layer, or the way that one client described us as the brains that sits inside their existing LOS. So within the OakNorth Credit Intelligence Suite, there's three key components that deliver you that forward-looking view. So Bryce will take us through a demo of these shortly, but just an overview. So firstly, Portfolio Insights, which gives you a portfolio-wide view, but the ability to run scenarios, segment that portfolio at speed, all while thinking about a forward-looking view of potential risk. OakNorth Portfolio Monitoring enables you to monitor individual credits, but not just looking at historical compliance with covenants or KPIs, but also embedding that forward-looking view. And then finally, for OakNorth Credit Analysis, incorporating elements of automation into initial underwriting and the annual review process to bring together that entirety of the Credit Intelligence Suite. So with that, I'm going to pass to Bryce, who will take you through a demo of the components.
Excellent. Thank you, Hugh. And as Hugh mentioned, everything we do is based on the future utilizing our forecast. So continuous loan monitoring with early warning indicators, covenants and KPIs, projected financials, everything runs off the forecast. So quickly, we'll start there just to give you a brief overview. Now, historically, most industry forecasts are really just intended to give a probability of default. They're driven by, maybe 10 or 15 top-down sectors, where maybe hundreds of industries are rolling up to manufacturing. At OakNorth, we take an opposite view whereby we start from the bottom up, and nothing better than the last 18 months to teach us that the historical correlations have been broken. To give an example, we don't lump all hotels into the same category. Specifically, we would think about a luxury resort being quite different than a business-centered hotel you might stay at for a conference like this one, where we're in person. So with that said, what we're doing is we're aggregating immense amounts of government and economic data, private industry and sector trade data, as well as alternative data points to do a couple things. We run a sophisticated AI regression to determine the cost and revenue drivers for this specific sub-industry. And that gives us a revenue curve. We don't stop there. In fact, what we do is we then take the industry data to create a cash flow elasticity model. What happens to OpEx, CapEx, and working capital to give us a more complete picture of this particular industry's future performance in detail. And the last thing we do that's kind of a secret sauce is what we call nowcasting. We go out and we leverage alternative data points. I pulled up quick service restaurants here, major contra from sit-down, dine-in restaurants over the last 18 months. What we would look at for them is maybe perhaps the quantity of card transactions or spend, footfall traffic in a public place like a McDonald's, a Burger King, something we can measure that tell us data that's a little bit newer and fresher than that of lagging economic or industry data. Now, where's the so what? What does this mean to leverage the forecast? Well, we do it in a few ways, as Hugh described. The first example is Portfolio Insights. What we're doing in Portfolio Insights is taking simply 14 data points from your spreading system and your core to look into the future to determine what available cash runway is there for each and every business that you have in your commercial book, what is their debt capacity or their leverage, as well as their profitability or their margins. So we take that three-pronged view to say, for second line credit or your chief risk officer and analytics folks, what sectors have risk aggregation, both by exposure as well as a number of borrowers. Additionally, we could look at that by size or even subsectors. And really the key in doing that specific exercise is to better understand not only where we're concentrated in risk, but also where there are additional opportunities to lend. Not everyone is performing poorly. In fact, there are others that could need credit or you could give them a better outcome and increase your wallet share, right? So Portfolio Insights is there to do those things while additionally doing one other thing, which is a prioritization exercise. If I were to tell you, you may have thousands of loans on your books that you consider high quality pass credits that are low in risk, we would probably all agree, right? So OakNorth, what we would show you is your pass grade credit, standard monitoring status, and all of the loans that we think of as low or lowest. And this gives you a list of loans that maybe perhaps you could deprioritize within the annual review, where your view of historical risk and our view of forward-looking risk are aligned in the same. Now, if we wanted to take this a step deeper, where we started leveraging increased data, instead of just 14 data points per borrower, we could take full financial statements from you in your spreading system. What that would mean for us is instead of doing a high-level stress test 12 months into the future, we could actually peer 5 years into the future at very granular and detailed metrics. So if I was to tell you in these thousands of loans that we all view as low risk, where is the needle in the haystack in a CECL environment? It's actually right here. I'm going to look for an amber or a red alert. An amber alert would tell me, in fact, someone is breaching a KPI, whereby a red alert would tell me that someone is breaching a covenant. So now specifically, when I look at this particular borrower, I can jump right into that KPI or that covenant forecast into the future, whether it's quarterly or annual, to determine not where this borrower has already gone wrong, but where we anticipate they could experience bumpiness. It gives you a different kind of conversation you can have with the borrower, perhaps increasing the quality of the credit outcome for yourself, the bank, but also the solvency of the borrower, right? Gives us a much smaller past dues report where we have to lean on behavioral attributes as opposed to really truly credit-driven exercises that bankers have trusted for their entire career. Now, beyond just monitoring kind of an ongoing automated annual review, if you will, we can go quite a bit deeper. In fact, at the point of underwriting or annual review or renewals, we can take the historical financial statements that you provide us and instantaneously give a high fidelity 5-year forecast. Now, that forecast can be put side by side with a stress test, your own scenario, and in fact, we're presently building out climate change scenarios for you to run the stress on the whole book or these individual borrowers. The key point there is the ability to easily take a look at these metrics and these different scenarios in a side-by-side fashion and look at the differences or the outputs in these different credit environments. Now, for the sake of time, I won't take you through the rest. We do provide the ability to compare against internal peers, external peers, as well as industry data benchmarks. And we'll also automate everything that we know inside of this system into a institutional or investment grade credit presentation. So something you could do very quickly when automating annual reviews. But I do want to thank you all very much for taking the time to watch the abbreviated demonstration here. We do have a lot more to show, but for now, I'll pass it back over to Hugh to wrap up.
Okay, I think it's coming straight to me. So we told you they were good, right? And hopefully you guys agree. You know, it's been pretty interesting over the past 6 years to watch how these fintechs, the 60 that have come to the FIS program, have responded to all these challenges from PPP, and then to watch how they rise to the occasion to meet the needs of the industry, even during a pandemic.
You know, it really has. You know, Daniel, I couldn't agree with you more. These guys are great. And I know we're having a couple of challenges today with imagery and doing all this live. So we appreciate everybody's patience as we work through this, but I think most it's going great. We have with us today Collins Andrews, who we're thinking today is the evolution expert, who has been involved with this program really since its early stages, doing this for 6 years, as everybody knows. You know, one of the things we hope for is that everybody who sits at the table at the Venture Center through this program is a winner. And one of the big winners in this, of course, is FIS. Collins, what kind of value do you think this program has brought to FIS over the last 6 years?
Yeah, I get nervous when anybody makes a mention of me being an expert in anything. I think the older I've gotten, the less expert I am. But I have been here 6 years, and I do know that when we started, we weren't really sure what we were going to get out of this accelerator. You know, we were hopeful, but we just did not know what it was going to do for us. And actually, the way we did the accelerator is the Venture Center team picked the companies, and then we spent a good bit of our time over the 12 weeks working with FIS, trying to convince them that these were good companies that they could use. They were good companies, but that was probably not the best approach. And so what's happened over the last 6 years is it's the solid reputation of the Venture Center and the recognition that it's got, the national visibility of some of these companies, the positive reactions that we've gotten from financial institutions that get a chance to go through this program. Those have all helped evolve the program to where it is today. And what it is now, at least for FIS, this is a serious search for complementary products. FIS now, while the Venture Center selects companies to choose from, FIS picks the companies. And they are providing outstanding support to each of those companies as they go through this 12-week program and then beyond. These are companies that fit FIS's product roadmap. They're viable companies that any of the listeners could do, and banks that work with them could do business with today.
Thanks, Collins, for that insight. We'll see some of those consumer-focused solutions, which you nicely segued into, in the next five presentations that are coming up right now. And you'll see all the exciting ways the fintechs are helping banks to innovate and engage digitally. So please now join us in welcoming to the virtual stage Bankifi, Atomic, Array, Long Game, and Tax Status.
Good morning, ladies and gentlemen. My name is Mark Hartley, and today I'm joined by Nick Reed. I'm CEO of Bankifi, and we're going to tell you what we mean by embedded banking. We're then going to show you what we mean by embedded banking. And last but not least, we're going to tell you again what we mean by embedded banking in that classic sales process of tell them what you're going to tell them, and then tell them what you've told them. So Nick, over to you. What do we mean by embedded banking?
Thanks, Mark, and good morning, good afternoon, everybody. So at Bankifi, what we mean by embedded banking is how you take a bank's internet and mobile business banking channels, which traditionally have played transactional roles for small and mid-sized businesses, somewhere where they check account balances, move money between accounts, make payments, and how we promote and elevate those channels to the place where SMBs manage all their business finances and access all the workflows they need to operate their business that you see on the right-hand side of screen there. Most importantly, in doing so, it puts a bank at the heart of those business customer relationships.
So Nick, what's the consequence if banks don't do this? What does it mean for them if they don't buy into our approach?
Good question, Mark. I'm going to use that word workflow again to answer that question. SMBs value workflows that streamline and automate their financial admin over everything else, even financial products. All the competitors on the right-hand side here are unbundling SMB order-to-cash and procure-to-pay workflows to the extent that they're already penetrating core banking services such as payables, receivables, and even small business lending as well. So banks are at a very real risk of losing their share of a large market to those digital challengers.
So I think we've done enough of the talking and explain it, Nick. Should we show them what we mean by it? Let's dive into the demo.
Agreed. So I'm now going to demonstrate how Bankifi's technology embeds SMB order-to-cash workflows in a bank's channels. So that's the process of invoicing and getting paid by a customer, as well as automating their accounting and reconciliation. We're so excited to be participating in the FIS Accelerator. We've even taken the time to brand this FIS for the purposes of the demo, for illustrative purposes. Okay, so I am an SMB using my bank's online banking site. As an SMB, visibility of all my payables and receivables data in online banking is extremely valuable. So I've consented to linking my Xero account. I see the transactional functionality I mentioned earlier, my account balance, transactions, moving money between accounts. What I'm really interested in is the order to cash workflow. So it's the weekend. I've allocated some time to financial admin. My mind is on the week ahead. I'm getting paid for the jobs I've got coming up. So I'm creating an invoice in preparation for a job I've got in a few weeks for my customer Mark. And online banking allows me to enter the due date, choose the checking account I want the invoice to be paid to, quantify the invoice amount, and then create that invoice. As you can see, that starts to build up a picture of my working capital position in online banking. But that's not all, because the record of the invoice is also written into my external accounting software, meaning I can manage all my workflows in online banking, and I don't have to manage data and workflow across different systems. Okay, so fast forward a few weeks, and I'm now on the road at Mark's house, and I'm going to use my mobile business banking app to send that invoice to Mark with an embedded method of requesting payment from him. My business banking app automatically pulls in details of all outstanding unpaid invoices, and that makes it really easy for me to find the invoice I'm looking for. I see Mark's name, the invoice reference, the amount, and the due date. So this is where Mark comes in. Mark, I know I've previously sent you invoices and payment requests as embedded links via emails, SMSs, WhatsApp messages, but now that we finally seem to be emerging from that nasty pandemic and we've been able to speak in person today, are you okay if I ask you to scan a QR code? It's really simple, even for a technophobe like you.
Wow, mate, it must be simple. Thanks very much. So all I do is hold my phone over it. I then, press pay. And it then takes me, it even looks, and it even knows I'm at HSBC, I bank at HSBC. And I assume all I have to do now is use my face to authenticate the transaction. Pretty slick. Thanks, Nick. You should have the money anytime now.
Wow, Mark, even you can use Face ID, who knew? Fantastic. So I've just received a push notification from my business banking app to let me know the funds have landed in my account already. And I've not even left your house yet, Mark, for my next appointment. Okay, so I'm going to open my business banking app back up, and I can see the status of the invoice has changed in real time to paid. Not only here in my business banking app, but also, as you'll see here, when we refresh the zero screen, the invoice status has automatically been updated to paid in my external accounting software, and my sales ledgers are automatically reconciled. So I've received the funds to my account, and all my financial admin has been taken care of. That is embedded banking, all within the bank's internet and mobile business banking channels. Thank you very much, Mark.
So just to recap, what we mean by embedded banking is the transformation of your mobile and internet banking channels from something that's purely transactional into the place where the business runs and operates from. So that's embedding workflows like order to cash, procure to pay, and full financial management. If you don't do that, we believe that organizations like QuickBooks, Sage, Stripe, PayPal, and others have got a much better digital experience than you have today, and they're going to take your customers away from you. And obviously, we don't want that to happen. We'd like to thank FIS and the Venture Centre for allowing us to take part in this wonderful program. And if you want to hear anything more about Bankifi, please don't hesitate to get back in touch with myself or Nick. Thank you very much.
Our next presenter is Jordan Wright, CEO and co-founder of Atomic.
Hey everyone, my name is Jordan Wright. I'm the co-founder and CEO of Atomic, as was mentioned. First off, I wanted to express our appreciation of being able to participate in the program. Mickey, Joe, and the team from FIS have been especially great to work with. I wanted to give them a shout out. Secondly, as I was preparing for this and as I was called on deck, I had a flashback to when I presented at Finovate Fall in New York for the first time. It's a 7-minute demo, and it's nerve-wracking. And so congrats to everybody on the work done so far. It is a nerve-wracking experience, but I think everybody's done incredible. Atomic, we're the leader in payroll connectivity. Some people refer to us as the MX or Plaid or Finicity of payroll. That's a decent way of thinking about it. But as a whole, our experience, my co-founder and I started a company a little shy of a decade ago called Unbill that we sold to Q2. It allowed us to do user permission access to merchant accounts so we could change out cards on file. What we heard from most customers that we talked to was that was great, but it was really important to also get the direct deposit, even more important. And then as we started looking at payroll connectivity across the space of payroll connectivity, in order to do that, we noticed there were several opportunities, especially in the verification of income space, but also in some other areas as well, as including making payments out of your paycheck. So the use cases for Atomic today are first and foremost direct deposit. we can update the account on file inside of a payroll system. So let's say that I, as a consumer, my employer uses Gusto, and I want to change. I just signed up for an account at a community bank. I want to change out where my direct deposit is sent. I want to change it to the new account I just set up. Instead of making that person go to their HR group or send in an email or having to communicate there and taking them out of the experience, you can keep them inside of the account opening experience or inside of the online banking experience and have them just change out the direct deposit right then and there. And it happens in real time. The bank or credit union gives us the account routing number. The person authenticates with their payroll account inside of Gusto in this case, and then we change out the account routing number on file for their direct deposit. It's user permission access to the data. And from a scale perspective, we had 1.6 million people into our SDK last month. That's up from 200,000 in January. We've been scaling very quickly. Another aspect of our product is the ability to verify income information or employment information. It's secure in a compliant way. Many people for an auto loan today are going to take a picture of a pay stub or things like that to be able to verify income. It's error prone and fraud prone. We have the ability to, in an authenticated session, grab the information about their paycheck and hand it off to the lender directly. In addition to that, we also have the ability to make loan payments directly out of the paycheck. So a consumer can sign up for a loan. Let's say in a buy now, pay later scenario, they sign up for a product that costs $1,000. They're going to have $100 payments taken out of the next 10 months. We could have those be taken directly from the paycheck and sent on to the lender. We also have the ability to make other sorts of loan payments like auto loans and things like that directly from the paycheck. This reduces the risk of default, but also gives the consumer a chance to be able to automate their finances. I'm now going to move over to the demo section. So imagine that somebody's sitting inside of either your online account opening app or potentially inside of online banking. They get prompted to switch out the direct deposit, or say they just signed up for an auto loan. They get prompted to set up payment for their auto loan. They would be taken to a page like this. This can be customized to fit your need and use case. Obviously, it would be the name of your bank, potentially a logo. Some customers build their own page here. But the key here for us is making sure the consumer knows exactly what information we are accessing, what information we're not accessing. They then come in to a payroll provider and they can, or an employer search. So in some cases, people will just type in the name of an employer that works for them or that they work at. Let's say I work at Walmart. Then I go in and I can enter my username and password to authenticate with Walmart and have my direct deposit updated in this case. We also have the ability for them to go directly to a payroll provider. Around 40% of people go directly to a payroll provider. One of the things we've noticed is incredibly impactful to helping people remember their username and password. You're probably sitting there thinking, I have no clue what my username and password is for ADP or Gusto or Workday or whoever it is. We can help them log in. We can help them recover their username and password. And this helps with our conversion rate. In some cases, with very large payroll providers, we even have the ability for them to say right up front, I don't remember my password, and we'll walk them through a password recovery flow. Now, let's pretend that I search for an employer that's not in our system, that we haven't mapped the payroll provider to that employer yet. They then can go and search from a list of payroll providers. And once they select that and successfully authenticate, we can go in and our system updates that mapping and says this employer uses this payroll provider. I'll go through this real quick with some test credentials. So say I'm an employee at Walmart. I just decided to move over to bank with my small regional financial institution. I enter my username and password. Again, we offer help for them signing in if they can't remember those. I have to give the specific information I need for the Walmart portal. I can move over. I now am getting prompted to move over my direct deposit. If a payroll provider, which many of them do, supports the ability to move over a fractional portion, that can also be configured within our system and allows a person to say, I want to move over 50% of my paycheck or $100 a paycheck or whatever it is. Once I confirm that, our system is going and connecting. In many circumstances, in fact, with our ADP connection as an example, it takes 3 seconds to do this. We've noticed though that by giving a longer time frame to the consumer, it helps in conversion rate to give them a little bit of a better understanding of what's happening, but also think it's going to take a little longer when it comes up 10 seconds short. They can typically do a much better job getting that taken care of. That's the end of the process for us. So now our system has gone in, successfully updated direct deposit within Walmart. And now you can choose how to communicate that with your consumer. That's the end of our presentation today. Thank you so much for your time. We appreciate it. If any of you are interested in learning more about Atomic, we'd love to speak with you.
Our next presenter is Lindsay Holden, CEO and co-founder of Long Game.
Hi, everyone. I'm Lindsay Holden. I'm the CEO and co-founder of Long Game. And I'm really excited to be here today and tell you guys about what we're building. Long Game is building a game. So let's have fun with this demo. We are all about the millennial and Gen Z generations. And I'll just stop and let you reflect on what are you doing today to engage with this generation? If you think about it, maybe some of you have kids in this generation, they're often on their phones. And they're distracted on their phones. What are they doing on their phones? They're probably not banking, but with Long Game, they can be. Long Game is a game. We sit on top of a customer's bank account, and we reward customers for saving, direct depositing, spending, for doing financial literacy quizzes. We are all about rewarding financial actions, and we do that using prize-linked savings. And prize-linked savings essentially is in our app, you earn coins for doing positive actions, and then you use coins to play these games that are really fun. We're going to show you them today, and you can win cash and cryptocurrency. So people are very engaged with our app. They love it. And I'm just going to jump right into a demo for you all because I think the product really speaks for itself. So let me share my screen here. Great. So here you go. I've opened the Long Game app and it's just loading up. But one of the first things you're going to see in Long Game is something we call our daily game. And the daily game is the time that the customer comes back to the app and they engage with your bank. And they do that. We basically have a rotating game. It's different every day, and they come and collect their coins. And so I'm just going to play this one for you. So here we go, just doing a scratch interaction. I won 11,000 coins in my daily game. I have a 2x multiplier on those coins because I have direct deposit trial set up. So customers that set up direct deposit with your bank, they'll get 2x on their daily coins, and they get to try that out. And then they also get savings coins. So based on my savings balance with your bank, I get a certain amount of savings coins every day. And so as I increase that balance, I get more coins. It's a really good way for them to both increase and hold balances with you all. And then at the bottom, you see the Save, Play, Win. This is a promotion that Long Games put a promotion for one of our games in here, but also you can put promotions in here for your products. So this is a daily interaction with the customer, and you can put in, check out your rates on a mortgage, or check out a product that you're trying to promote. So I'm going to collect our coins, and it's taking me right into my Long Game home screen. And Long Game is customizable. So this will be branded with your bank's branding. So up at the top where you see Long Game's logo would be your logo. And then you see my savings balance is brought in here. That's brought in using Plaid. So it's a really easy integration for the customer. They're essentially sharing that data into the app and getting rewarded when they complete financial actions in their bank account with you. Here you see our home screen cards. Home screen cards are also a place where we encourage the right financial actions and like teach people about rewards. This is also where you can put your own products and branding and messaging into our app. So this can be whatever thing you would like to get in front of the customer. We also have financial trivia. We allow customers to essentially play trivia for rewards. And as they complete trivia questions, they're learning about different products within your bank. And you can also customize this with your own content if you have areas you'd like to educate your customers about. And then here you are going on a journey in long games. So as I am progressing in my savings account, I am opening up new areas of the app. Here is my finances screen. As you can see, we're pulling in their savings account balance and we're featuring the long game wins. And so that brings me to the reason people love coins. And that's because you can play long games and we are essentially running sweepstakes and win cash. And so what's so great about this is we've actually taken all the best games, the favorite games of people from, just mobile casual gaming and brought them into an interaction that's increasing their financial wellness. So I'm going to play a game for you all so you can check it out. This game is Lucky Bounce, and we have 50 games today, and they all require, they have different top prizes. As you can see, this one's $1,500 top prize, and I'm spending coins to play. And again, I got these coins for saving, direct depositing, and completing financial literacy education. And so here I go. So Long Game is running sweepstakes for your bank. We operate today in 49 states. We don't operate in Georgia. And we are doing all the sweepstakes. And when someone wins cash in our game, so you'll see here I just won coins, but you can win cash. And when someone wins cash in our game, we ACH it into their underlying bank account. So we're just gonna finish this game here. Okay, so I won more coins, but as you can see, there are cash prizes in this game. I could have won 38 cents up to $1,500. So too bad I didn't win cash, but luck of the draw here. And I'm going to switch back to some slides and just continue on this presentation with you all, because this, even though it looks like a game, is very serious. We are helping you to engage with a demographic that is very hard to engage with. And so just moving forward here. The other thing we do for you that I did not show today is actually we do customer acquisition for a lot of our partners. And so when, if you're looking to grow your your accounts with this demographic, we actually have a product where you can pay to add new accounts through Long Game. And so what that means is someone comes into Long Game, they try out the game, they try out the app, and we market your bank to them because they need a bank account in order to play and get the rewards. And so this is a really fun way to engage and add this demographic. We see amazing product metrics. If you want your customer to be engaging with your bank every day, you can use Long Game, and they're going to love engaging with you all. And so some of just the high level metrics here, very high retention. Our habit ratio is, so 40% of customers that engage monthly are engaging daily with Long Game. And so this is a chance for them to engage with your bank and see all of the products that you have to offer. This is actually a really easy product to test. So essentially, we don't do a technical integration with you all. We use Plaid. So essentially, Long Game team will set up an app instance for you. We'll work with your marketing department to get all your branding in there, get your products in there, and then you can send out an email to your customers, and they just log into Long Game using Plaid. And they are permissioning that data sharing, and they're able to interact with your bank. And when they click to deposit, it takes them back into your web app. You can take them into your website. So we do see quite a large increase in engagement with your bank when customers are using Long Game. So just to review, this is something that is a really easy way to drive success with your customer, drive LTV, really add new customers. So if you want to increase financial literacy with your customer base, increase brand affinity, cross-promote your products, Long Game is a really great choice for you, and we would love to have that conversation. So if you'd like to learn more, please reach out. And I want to just thank FIS and the Venture Center. You guys have been fantastic to work with. Jared at FIS, you guys are great, and we really love this program.
Our next presenter is Jacob Bauer, Director of Sales and Strategic Partnerships from Array.
Hi, everyone. My name is Jacob Bauer, Director of Strategic Partnerships at Array. At Array, we're a credit and identity solution that embeds inside the mobile banking environments of our customers to help them support the financial wellness of their customers, increase digital engagement, and of course, drive revenue through product sales. At Array, we say more than a score because just providing one credit score at the top right of a mobile banking solution is no longer acceptable for customers, and we'll teach you how you can leverage Array to grow your business. So we have 10 years of experience in this space. We're actually a spin out of a business called Pentius. That relationship with all three bureaus has given us a jump start in this industry, not just from a technology perspective, but also from a pricing perspective, as we can offer the best possible pricing of credit data to our customers. We have actually over 100 clients today after only being in business for a year and 8 months. Those customers are credit services businesses, fintechs, and banks and credit unions. We actually just raised our Series A. The announcement formally will be coming out soon, but we're excited to be working with these partners and continuing to grow our business. And so we talk about the financial landscape when it comes to consumer credit and identity protection tools, not to compare every institution out there to Capital One and Chase, but to show what consumers expect when it comes to credit insights. And so Capital One and Chase have built these in-house. These tools took a long time to build. They have teams of over 50 people on these projects, and it costs them millions of dollars to bring these into market. With Array, any institution can partner with us to get these types of tools in market quicker, faster, and cheaper. The affiliate marketers are on the other side of the slide. Those are the Credit Sesames and Credit Karmas of the world who've created a business by offering credit information to your customers and turning that information around and selling them competitive products to your institution. By partnering with Array, we can allow you to keep your customers inside your digital experiences when it comes to credit insights, where you can sell them your products. And so the value prop is simple. Work with Array to help support the financial wellness of your customers and increase scores to create a more lendable customer base. Because everything that we do is fully embedded inside your mobile banking instances or on your website, we're helping you increase customer engagement and keep your customers inside your solution engaging with our tools. With that engagement comes data, the credit attributes of your customers, as well as their intent and behavioral data to help you match customers with the right products at the right time, ultimately helping you drive revenue. So the product has 3 buckets: credit, identity, and offers engine. Within credit, there's tools such as telling consumers, what is my credit score? How can I improve that score? What are the factors making up my credit score, and how can I actually leverage that score when it comes to products of the institution? Over 20 embeddable modules in this credit bucket. On the identity side, these are things like identity monitoring, identity restoration services if something was to happen, identity insurance products, really helping you protect your customers, and offer a full suite of credit identity solutions. Everything within these two buckets is fully customizable and a la carte. And so we want to get to know you, your customers, your institution, and your products. So we can align our offering with what can maximize engagement and obviously help you sell the most products. The offers engine sits on top of both the credit and identity platforms, utilizing the data, the credit attributes themselves, and the behavioral intent data, matching your customers directly with your products inside of Array, as well as passing that data directly to you so you can use it in your omni-channel marketing approach to send emails, mailers, purchase ads, so on and so forth. Everything we do is fully embedded and white labeled. And so your customers are engaging with your brand when it comes to their credit identity. We can customize the look and feel entirely to match your digital banking instances and websites and do it quickly. And last but not least, compliance is super important to us. We actually tokenize the data so that we're keeping you out of compliance scope when it comes to PII, passing the information directly to consumers, which allows us to go to market quickly. So there's some common use cases of Array that I want to go over. Of course, we want to help you upsell. It's also important to actually recapture declined applications and offer them Array and come back to them when those scores are high enough to offer them products. We can help you create non-interest income by creating paid offerings with maybe a 3-bureau score or a full suite of identity tools. And we can also help with new customer acquisition when it comes to digital ad space, applying our tools inside of a loan application process, so on and so forth. Inside the solution, just going through a few modules here in the demo. And so in this case, you can see a 1-bureau report. As you can see, I can toggle between bureaus. This is really important because we want to tie the information that your consumers are seeing to the information that you're using when you're decisioning on a consumer loan process. And so if I want to show this on a tablet or a mobile or even in a widget, we can help you get that real estate to get your customers coming back to the solution time and time again and giving you more data to understand their customers better and sell them more products. So if I go to the report, you can see things like account summaries, payment history, or even hard inquiries. These are all the things that are going to be sent back to the bank in real time, letting you know what your customers are doing and how you can continue to sell them relevant products. Moving on to some of our more innovative tools, we have debt analysis tools where we can calculate debt to income ratios in real time. We have credit score factors, looking at the 6 main factors that the bureaus are calculating when they give your customers a score. So if I click into credit card usage, I can see, great job, I'm not using too much of my limits. Well, what does this mean? And how do we get this percentage? And certain pro tips, all specific to the user, helping them keep that score up or improve that score with some simple steps. We have alerts, keeping customers engaged and bringing them back to the solution if they need to be. And a simulator, which is more marketing focused, which tells them what might happen if I open up a new card for, let's say, $10,000. As a consumer, I'll simulate that score and it will tell me what it will do to my score and how it will affect it. And so if we fast forward to some of our customer instances, I want to show an FIS customer who built a prototype with Array inside of an FIS mobile banking solution. And so while they went for score factors, credit reports, and alerts, they also keep that card right in there because they have the information knowing that I have the right score and the intent to purchase a card from their institution, where I can go directly into an application process right outside of Array. In another demo, I want to show you what Citi's mobile banking instance looks like today when it comes to consumer credit insights. Right now, there's one score at the top and a timeline. But with Array, it can look like this. Fully customized inside their mobile banking solutions, as well as all the different dynamic tools that'll really give the customer a full picture when it comes to credit and identity, but also a great way to promote growth for your institution. Just want to say thanks to FIS, the Venture Center, and everyone who's been involved in this program. It's been amazing for us, and we're excited to work with you all. Thank you.
Our final presenter is Charles Almond, CEO and co-founder from Tax Status.
Hey, everybody. Hey, everybody. Thank you so much for sticking around. You made it. I'm the last. So I want to share with you tax status. And I am Charles Ullman, the founder and CEO of Tax Status. And when everyone thinks tax, they think of beautiful blue skies and white puffy clouds. Now, we have had a great time with the FIS Accelerator. We have met over 50 banks, and I can tell you every single one of them has shared with us that there is no greater problem than having to collect IRS information and do it timely. Loans are taken forever. The customers are unhappy. The banks are unhappy. It's such a nightmare. So we have a very specific goal at Tax Status, and we want to do nothing more, literally, than give every lender immediate and instant access to all IRS tax records and account status for any individual or business. And while doing that, I want to give every taxpayer and business owner insights into their own IRS account so they can see what's going on, right? And the way we do this, we're an IVES provider like the rest of the industry. The 4506 is the thing that's causing the nightmare. We can do that, but we do it better. You think of us as IVES Plus. What we're doing is we're adding additional consent that gives us ongoing access to the IRS account. All electronic, all seamless, but the idea here is now we're not pulling 1 or 2 transcripts. You don't just grab 2 for the loan or 3 for an SBA loan. We grab all transcripts. So we collect and analyze all available IRS records with taxpayer consent, obviously, and we show that current status and account history for any business or individual. So again, let me say that again, all transcripts. So a lot of the banks were like, well, can I get these 2? Can I get these 3? Can I see a tax transcript versus a wage and income transcript? All transcripts are sitting here ready for download with the click of a button. When you pull all the information in, I'll give you an idea, for an individual, that's over 80 transcripts that we would collect. And for a business, roughly 140 transcripts are pulled in. There's not a soul in the bank or credit union that wants to sit there going over all that data. So what we do is we analyze it, bring it in, and make all that information available to you, because no longer are you just looking at a couple transcripts. You have the ability to literally shop for your transcripts like you would on Amazon. You can use the website or our API, and you can literally download anything you want. You want the tax transcripts? Click them. Click the download button right there. If you want to group them all together and download them in a single PDF, cool, do that too. You want the wage and income transcripts? Scroll down, grab those. All of them are sitting right there ready for your download. But because you don't want to sit there and read them all, right? What we've done is created the tax status report. It's a beautifully organized and easy to understand summary of all of that information. So after talking to the 50 banks, it's been very, very clear what they care about the most. So what you can see here on the bottom right is all the official income for a business. It would be your sales, your income, your wages, your potentially balances due, right? So all the income and information around your financials on the right. And on the left side down here, you've got all your filing history. This is your compliance. You know, a business may walk in off the street and say, oh, well, you know, I've been in business 10 years. I file everything timely. Well, now you can see for sure. And so all of the history, both for the annual, right? Everyone often just looks at the 1120s, 1065s, 1040s, says, oh, yeah, I'm good. But then they don't pay their payroll taxes, or they pay late, or they never file, right? You can see all of that transparently right here in the bottom left. Now, inside the IRS, there is a magic score called the Q score. The Q score is what the automated collection system uses to determine who the IRS is going to go after. When you've got something like 35 million people that need to file or owe money, and the IRS has limited resources with like 12,000 people, they need automation, and that score tells the computer who to go after. So what we're doing is we're mimicking that information. That at the very top of the form, you see all that summary. You see that the IRS looks at audit activity, compliance activity, and collection activity. And with respect to collections, what's the balance due? Total. What is the total liens? Are there any tax liens? We can see that and give you those numbers right away. Back in 2018, all of the credit bureaus pulled it off the credit file. So all the banks are flying blind with respect to tax liens. So now, and at the very top, you can get the balance, get the tax lien information, and you can see the risk. This isn't credit worthiness. This isn't credit score. This is simply how long does this taxpayer or business owner have before the hammer drops. Literally, if you're in the red, you got 2 weeks before you can expect like a bank levy where the IRS is just going to take your bank account. And if you're in the yellow, you got 6 weeks. And if you're in the green, you're fine. IRS doesn't want anything. We said that you can only do this with taxpayer consent, so it's all electronic and we get their permission first. They do it because they want the loan. They do it because they themselves want to know what's going on. So they go into the bank, the bank can say, I need Jane Doe's information, social security number, or business and EIN. And in real time, right now, we will check with the IRS systems and let you know if those are real and valid. If they're not valid, you know those are the wrong numbers and saves you weeks of back and forth working with that customer and prevents fraud. This customer gets an email, gets a text message, clicks a button on the phone. We file the authorization with the IRS. And then from that moment on, for the next 3 years, you, the bank, and the taxpayer have the ability to look at their information anytime they want, any hour, any day. We pull in the latest information and make it available. So you can think of this as active intelligence. We're getting away from 1 or 2 transcripts. You can see them all, continuously monitor. And so because you have alerts that allow you to receive notices when returns are filed, you don't have to go looking. They'll tell you when something comes in, and you don't have to chase the borrowers anymore for their tax returns. You can get alerted to any new tax liens, and obviously for the taxpayer, any of those alerts act as an early warning system if someone stole your identity. So industry first, all this data, verification of EINs in real time, current tax lien balances with the press of a button, all these notifications available through monitoring. So you get all transcripts, all the status, ongoing monitoring, instant updates, and simple pricing, so you only pay what you need. Absolutely, reach out. If you have any questions, we'd love to help you. We're helping 40 banks today with all their IRS data and account monitoring needs. A big thank you to FIS and the FinTech Accelerator team. They've been amazing. We've worked with them every day for months, and it's been an absolute treat. So thank you so much, and thanks for joining us today.
All right, thank you very much. That's another great group of presenters representing the incredible body of work over the past 16 weeks. And they couldn't have done it without this guy to my left. You're going to see in a minute, Hamza Kadir, who has a crippling fear of public speaking, but he's here to talk to you about Best in Show. Hamza?
Thanks, Daniel. I appreciate that. Well, thank you, everyone. Thank you. We're thrilled to be here to congratulate the cohort today. But before we do that, we're going to kick off a real quick poll, which you should see on your Zoom screen now. And that's for you all to help us determine the Audience Choice Award winner. Now that you've seen all 10 of the presentations, please take a few moments to select the demo that you considered to be your favorite while we make a few congratulatory remarks to the cohort. We had the privilege of watching you eager fintechs grow 30 minutes at a time. With just under 60 visits with financial institutions, dozens of visits with top-tier venture capital firms, and industry-recognized subject matter experts, and not to mention the 12 weeks of one-on-one with your favorites, the Venture Center team, we can proudly say that each of you have all strived to help co-create the future of financial services. In addition to being outstanding fintech companies, we want to make sure that we don't forget about all the amazing people behind these innovative solutions. The group of people that we were lucky enough to work with as part of this cohort overcame all of the hurdles that come with not only building their businesses amidst a pandemic, but also all the personal challenges that are inherent of being an entrepreneur and working at a startup. Your moments of professional and personal triumphs through these 16 weeks are moments that we will all remember and cherish. And so with that being said, we'd like to congratulate you, the 2021 FIS cohort, on an incredible job well done and in completion of the FinTech Accelerator program. Please give the cohort a round of applause as we officially welcome you as graduates of our program and alumni of the Venture Center. And now announcing, with no card in my pocket, the Audience Choice Award winner is Long Game. Please help me in congratulating Long Game as your 2021 Demo Day Audience Choice Award winner. Great job, Long Game. Next up, we're going to do something a little different than usual. Usually we give it out an MVP award, and Wayne's going to tell us a little bit about how we're doing it this year. Wayne, thank you.
Deal. Hey, thanks, Hamza, and congratulations to Long Game. And I think everybody's a winner in this opportunity. Next, I have the pleasure of bringing Collins Andrews back up on stage to hand out the MVP award, or what we call the Most Valuable Participant Award. But this year, we're going to change the name of the MVP award. We're going to change it to the Collins Andrews III MVP award. And there's a reason for that. We'll have a little fun at his expense. You know, Collins has been involved in the accelerator since its inception and has really helped to steer the accelerator ship from its early days. His contribution has been immeasurable, and his dedication to the founders and FIS is simply second to none. And I'm glad Jeannie, his wife, is here with us in the audience today. You know, Collins simply cares, and in his wonderfully irreverent way, has the ability to make sure others care too. And, you know, Collins is not without an opinion. By God, just ask him. And he is happy to share, but always with everybody's best interest in mind. Collins knows how to make this process fun, and if you know him as I do, you would know he would not do this if it was not fun. But he has a way of doing that and also making a difference. So a little secret that most of you don't know, maybe I'll use a dirty little secret because it's about their automobile undertaking here. So last year, the Andrews family went on an adventure to start Andrews Auto Sports, and they started a dirt track racing team and have had some great success. And let me show you a picture of he and his son, Spencer, who started this together. There they are. And you'll notice Collins, of course, on the right and Spencer on the left, a couple of good-looking fellas there. Now, look, the car is cool. There's no question about it. And the fact that they've also won 4 out of the last 5 races is remarkable. But what's important to recognize here is that this car is also being used to make a difference, to help encourage people to get vaccinated in Arkansas. As you can see, VaxAR and Vaccinate Arkansas emblazoned on the car. And, you know, honestly, I think this is such a great example of how Collins has fun while making a difference for those around him. Collins, we are just so proud to put your name on this award and to recognize your contribution over these past 6 years and really making this accelerator program one of the best in the world. Collins, thanks for all you do.
Well, you know, I kind of had an idea that something was going to happen, but putting my name on an award, I hope it doesn't diminish the value of the MVP award, because it really is a valuable award. But you're right, this program is fun, but the reason it's fun is because of the entrepreneurs. These kind of people are so much fun to work with. And this year, this is a good group of people, and we had a hard time deciding. In fact, probably, I guess, the most difficult time we've had before. So we had some criteria that we were using to try to figure out, well, okay, who's the MVP? So we looked at, well, who participated well in the program? In other words, did they do what we asked them to do? Did they take our coaching? Who worked well with FIS? And particularly, what were the reactions that we had from financial institutions? Did they listen? Did the companies listen to them and change when they needed to? And then finally, and I guess how we've maybe made the final selection is which company took advantage of the program for the benefit of themselves, for the benefit of their company, so that they will, in fact, be a better organization because of what they got to go through in this program. So after much internal discussion, we have come up with a winner of this year's MVP award, and it's the last one you saw there, tax status. So now, tax status joins the ranks of SecureTech and TrustStamp and Changed and Arcanum, previous winners of awards from the Venture Center, and we look forward to working with them more in the future. Good deal. Back to you, Wayne, and thank you for embarrassing me with the Collins Andrews Award.
It was my pleasure, Collins.
Yeah,
we love you. You know, that's pretty much close to the end of the program. I want to take a moment to thank my incredible team at the Venture Center, who just work so hard to execute on these programs and to do the things that we do. You know, Mimi, Daniel, Hamza, Pierce, Michelle, Annalise, Molly, Becky, Ashley. You know, we just couldn't do these things without you guys. My board of directors, some of you are in the audience today, thank you for the support that you give me and the organization. To the banks, the venture firms, the subject matter experts who attended this virtually, gave of their time, we are grateful to you. And of course, our sponsors, FIS, the state of Arkansas, Governor Hutchinson and Mike Preston, the Little Rock Tech Park where we live, we love our spot, the regional chamber, Jay was with us today, Simmons Bank, CFO Network, Frost, who's here with us today, accounting, Wright Lindsay Jennings, who's also participating with us here today. Thank you all for what you do. Daniel, wrap it up.
That's all we got, ladies and gentlemen. It wraps up the 2021 FIS Fintech Accelerator. Thank you all for coming. Be sure to sign up for the newsletter, venturecenter.co, no M on the end to be confusing. So you'll be the first to know when it's time to register for next year. Collins?
The Venture Center thanks sponsors and supporters, including Governor Asa Hutchinson and the state of Arkansas, Arkansas Economic Development Commission, FIS, Little Rock Regional Chamber, Wright Lindsay Jennings, Little Rock Technology Park, Simmons Bank, Frost PLLC, and CFO Network. Thank you for attending the 2021 FIS Fintech Accelerator Demo Day. We'll see you next year.